Welcome back to the channel, everyone. Today I want to talk about why Citadel didn't bail out Robinhood when they had their $3 billion margin call. And I also want to talk about the possibility of Bank of America, Citadel's largest prime broker, responsible for over 99.69% of their trades, going bankrupt. So stay tuned and let's make some money. But before I dive into the video, if you haven't already, be sure to pick yourself up some AMC related merch. That there is the Space 8 hoodie, and I've also got a bunch of other designs over on my website, linked in the description below. And also while you're down there, be sure to join the private Discord, also linked in the description below, and become part of the team. And now I want to dive straight in with the key information. So, this here is another excerpt from the interview with Mark Coates, the ex-hedge fund CEO. He gives his opinion on why Citadel bailed out Melvin Capital instead of bailing out Robinhood. So let's hear what he has to say.
I mean, Citadel right now is 32 times more dangerous than Goldman ever was because A, he's so leveraged. This is Griffin. And he's a genius, by the way. He is not a dope. He knows exactly what he's doing. He is hugely leveraged. He's tied into every part of the market. He's in hedge fund. He's in trading. He's in market making. He's in ARB. He's in pay for flow. He's in he has every single table at the casino and the eye in the sky and the bank covered. He is on every part of every trade, this guy. And he's hired former government lawyers, officials. He has Bernanke. He used to pay Janet Yellen. He's got everybody. So he has this thing tied and wired soup to nuts. But what completely screws up the argument by the Wall Street bets and Reddit, whatever crowd that has you, is you get down these rabbit holes and you can get lost. You know, this whole argument about how many shares are in the float. You know, they keep changing this, or they used extra boxed or extra fail, right? Griffin and Citadel want you to focus on that because it doesn't mean jack to anybody. And they basically could say, who cares? What matters and what's key. And if you get in those who are listening to this, and I hope a lot of people do, if you get nothing out of this, I want you to listen to what I'm about to say, okay? When Robinhood and the long-haired guy who runs it, what's his name?
Vlad?
The greasy guy. Yeah, Vlad. When he was on the Cartoon Network, also known as CNBC that day, he said, you know, there's no margin call. Everything's great. Everything's wonderful. It's business as usual. Everything's fine, right? To then find out hours later that Robinhood had a, what, a $3 billion margin call? Something like that. They had a $2 billion, $3 billion something with DTCC where they needed to raise money on an urgent basis overnight through the VC guys. I think that's sort of the timeline. What everyone should ask themselves is, why did Citadel give Melvin money, right, as a bailout? Because Melvin was about to go under. Why did Citadel give $1 billion or $2 billion or whatever they gave Melvin? Why didn't they just give it to Robinhood? Robinhood's their customer. Robinhood is their guy who they play the payment for flow game. If you and I, right, are as tight can be, and you have a $3 billion margin call, you call me up and say, hey, Mark, we do all this business. Can you loan me $3 billion for a week? Sure, Lucy. What's it going to cost you? I'll give you 10% of my firm, right? I'll give you 10% and I'll pay interest. I'll say, no problem. I'll wire, you'll have the money in 4.7 seconds as soon as I hit the return key, right? Why would Ken Griffin not have given Robinhood money? Why did they give it to Melvin, who had the absolute wrong side of the trade as everyone from Robinhood? Why? I've never heard anyone bring it up. I've never heard anyone ask the question. I would like to get the greasy-haired guy Vlad, Griffin, Warren, Senator Warren, Gensler, head of the SEC, all in a room, all in the room, Melvin in the room, and I'll do the asking of the questions. I'll ask everyone the questions. I'll create the timeline, and everyone can sit there and take notes, and that way we can get to the truth.
What would your answer be? Why did they do that? Why did they?
Because I think Citadel was so upside down in the GameStop, AMC, whatever MEME stock trades that given their leverage, they would have gone under. They would have gone under had this Melvin thing gone another day or so, because there's no reason that a sane person without lying could say, why would Robinhood stop one side of the trades that day? Because what Robinhood did was they completely and utterly destroyed their clients. They completely, when you close one side of the market, the other side of the market, the downside of the market is a huge winner. If you have all buyers and no sellers, stock goes through the roof. When you have all sellers and no buyers, the stock collapses.
Now, I think this explains the main reason as to why Citadel decided to give money to Melvin Capital and not to Robinhood. And it's something that I've theorised on before, something that I've mentioned in one of my videos previously. Melvin Capital, with that close to bankruptcy, they would have obviously had to cover their entire short position if they went under and got margin called. Now, if Melvin had to cover their entire short position, it would have caused AMC and GameStop to fly much, much higher. GameStop wouldn't have been capped at $400 a share, and AMC wouldn't have been capped at $20 a share. It would have flown into that absolute stratosphere, and we would have had the mother of all short squeezes. Now, if we had the mother of all short squeezes, Citadel would have been caught up in that as well, and because they're so heavily leveraged, Citadel would have gone bankrupt as well. Therefore, it sounds like Citadel were pretty much down to their last $2 billion at the very height of the AMC and GameStop run-up back in January, and therefore they could only give the money to one firm, Melvin or Robinhood. And they had to make that decision and said, well, if we don't give the money to Melvin Capital, they will have to cover their short position as they will be liquidated. And if Melvin get liquidated, then we get liquidated as well. But obviously for Robinhood, all Robinhood is doing is routing trades for retail customers. If Robinhood went bankrupt, it's not really too much of a problem to Citadel because they're on the other side of the trade to Robinhood. And therefore, Citadel obviously decided to lend the money to Melvin Capital to save Melvin and therefore save themselves. And that's why they didn't lend any money whatsoever to Robinhood. But obviously Robinhood had to find their own way out of it as well. They knew they weren't getting any help from Citadel, and if anything, Citadel were probably pressurising them to turn off the buying so that Citadel and Melvin didn't continue to be in an even worse place and didn't end up going under. And therefore it left Robinhood no choice but to strike a deal with the DTCC and effectively with Citadel as well, turn off the buy button in order to decrease the security deposit that they had to make with the DTCC. But it's super interesting that Mark knows just how leveraged Ken Griffin and Citadel actually are, and how he said that the most important thing is the fact that Citadel and Melvin were so close to the wire that Citadel had to lend money to Melvin because otherwise Melvin and Citadel would have both gone under and been margin called. Clearly Citadel were and are still on the wrong side of the trade. If Citadel almost got margin called when GameStop was at $400 and AMC was at $20, therefore Citadel are still very heavily negative on their overall short position. And that's why Citadel obviously can't cover their short position and why the shorts haven't covered in AMC nor on GameStop. And therefore we just have to continue fighting the same fight, and we have to figure out what stops the hedge funds and the institutions and the market makers, most importantly, from not being able to roll over those failed delivers. Because obviously both times in January and in June, they've had to stop rolling over those failed delivers, and that's caused that AMC price to run up, or maybe something caused the run up, which effectively caused them to not be able to roll their failed delivers. Now, something that I think may cause the next run up for AMC and GameStop is all of this bad press for Citadel, which is causing investor withdrawals. Obviously, if there's tons and tons of bad press for Citadel, their investors are going to get worried and demand their capital back. And that means that Citadel is going to have to liquidate some of its positions in order to get cash to pay back out to their investors. They're either going to have to sell off some of their long positions in Amazon, Apple, Microsoft and everything else, or cover some of their short positions in order to feed those investor withdrawals. Now, obviously, if too many investors want to withdraw their cash because there's too much bad press for Citadel, then it means they're going to have to pretty much sell off all of their assets and cover all of their shorts. Back in 2008, when the market was crashing, Citadel obviously lost significant amounts of their investment portfolio because they were so heavily leveraged. And at one point, Citadel actually refused to give investors their remaining cash. Citadel actually halted all investor withdrawals, they laid off massive amounts of staff, closed offices, and did pretty much anything that they could to survive the 2008 recession. There's been interviews before where Griffin talks about all of the sacrifices he had to make just to survive. And obviously one of those sacrifices was refusing and halting investor withdrawals. Now obviously because there's so much bad press at the moment for Citadel, there's going to be so many investors withdrawing their capital, meaning that Citadel is currently in a very, very bad position. And therefore I think we need to continue the hashtags on Twitter and continue bringing media attention to what Citadel is actually doing at the moment and how it's a bad thing for their business and how investors should withdraw from Citadel. Yes, you could argue that Citadel could potentially halt investor withdrawals again in 2021, but at the same time, if investors feel there's something fraudulent going on, they can demand their capital to be withdrawn. Now, I also want to talk about what's currently going on with Bank of America. Too long didn't read. It's possible that Bank of America is holding the biggest bag in the GameStop saga. As some supporting evidence, the $15 billion bank bond. On April 16th, Bank of America issued a $15 billion bond. Now, given they had an extremely strong quarter, why would Bank of America need the additional collateral? Watch this video at the 1:30 mark. The CEO of Bank of America says, assuming we get through the stress test. He catches himself and is like, I have to be super confident here. Now, I've covered this stress test in one of my videos previously, and it's all to do with banks now having to hold at least $1 trillion in high quality cash capital from October the 1st. There were some percentage breakdowns that I covered in one of my videos previously, but it's something between like 8 to 15% of their assets and actual cash collateral, depending on the size of the bank, the risk of their portfolio, and many other pieces and individual circumstances for each individual bank. Now obviously carrying so much cash is going to be very difficult for banks that have already got all of their capital invested, especially if they're upside down in some trades that they can't close positions on. But how exactly does this link in with Citadel? Well, supposedly Citadel specialises in option naked shorting, and because of GameStop, they have an ever-expanding bag of rubbish. These securities sold but not yet purchased, or derivatives, went up to $57.5 billion this year, with $32 billion of it in options. As an extract from Citadel's financial statements, it says the company has a concentration risk with respect to its derivative financial instruments. At December 31st, 2020, Bank of America Merrill Lynch serves as clearing and prime broker for 96.69% of the company's net derivative assets. I do apologise, I think at the start of my video in the intro I said 99.69%, but it is actually 96.69%. Either way, Bank of America is basically the biggest clearing broker for Citadel, managing pretty much all of their trades. And therefore, Bank of America, or now BAC, is the prime and clearing broker for 96.69% of all of the net derivative assets of Citadel securities. And therefore, they're holding the $57.6 billion bag of Citadel poo, and $32.3 billion of it is in options, with a ton of those that are going to explode in their face or be worthless. Bank of America also holds a decent sized put position on GameStop and AMC, as revealed from their most recent 13F filings. From the Bank of America Q10 quarterly report, we can see that for the first quarter of 2021, Bank of America had a giant cash outflow of $52 billion. The majority of this coming from trading and other derivative assets or liabilities. Basically, a massive, massive loss on their derivatives. Therefore, it sounds like those put positions on AMC and GameStop moved massively against them, obviously, in quarter one of 2021. Now, you've also got tons and tons of closed locations. Currently, hundreds of Bank of America locations across the United States are currently closed. To my understanding, some of these locations were being boarded up due to the trial of George Floyd, and also I understand that with the shift to mobile and online banking, there is also less need for physical locations. But does that facilitate about 1/5 of all locations being temporarily closed? I'm also pretty sure that Bank of America recently also had problems with their online banking and wasn't allowing any customer withdrawals or customer payments from the online banking platform. Now, I also wanted to speak on Adam Aaron's recent tweet about James Bond's No Time to Die. I actually went to see this in my local Odeon, which is owned by AMC, and it was a brilliant, brilliant film. I went with my whole family. We also got the popcorn, the hot dogs, the big drinks, and the reclining seats, and it was a brilliant, brilliant day out. If you haven't yet been to see James Bond's No Time to Die, it's a brilliant film. I do know that it is definitely bigger in the UK. I think it is also showing in some screens in AMC across America as well. James Bond's No Time to Die smashes ticket sale records across the Atlantic. In the UK, Saturday ticket sales set a new one-day record for any Bond movie ever, dating back to 1962, and therefore it was the highest Bond day in 59 years. So the sages predicting the decline of cinema choke on that. And the official box office numbers have now been released, or the estimates at least, and it says James Bond did $113 million in their opening weekend, and Venom 2 did $71 million. Shang-Chi is still doing well, at least $1 million every weekend so far as well. Cinema is dead? Really? I don't think so. See you soon on the moon, ladies and gentlemen. Now this is absolutely massive because Shang-Chi only hit $71.4 million in ticket sales on their opening weekend, and Black Widow hit $80 million on the opening weekend. Guys, be sure to let me know down in the comments below what you think about Citadel bailing out Melvin Capital and not Robinhood, and also whether you think Bank of America is going under. And also while you're down there, be sure to pick up some AMC related merch from my store that's linked down in the description below. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.